All right, so welcome back to Trade Ups. Today I will be talking about the trade plans that I did for today and what was the result after that. So basically, not really a good trading day. The reason is that there were some trades like USOIL wherein my bias was correct. However, I took profit too early and I did not allow the trade to run as much as it can, especially holding from London session up to the US session. This would have been the best trade. Should I have hold my trade long enough, or if I have followed my plan that once I have 2 or 3 positions, I need to make sure that I take profit after 1:2 risk reward for one of the positions, and then just wait or hold on with the rest of the positions, but making sure that the stop loss is already at the break even. So let me first start with this US oil because it's really a good trade. However, psychologically, I wasn't able to hold it long enough. So I think if I was looking back on today's trade, the problem is that with US oil, I started short and then I get stopped out. And because I get stopped out with 3 positions, so over here, I have a short position over here. I will mark it with some, or maybe here, sell. It was, I thought it was really a good entry. However, I did not consider that there is actually liquidity here. So I was stopped out with that. And 3 positions, I get stopped out, and I needed to re-enter trades later in the 3rd hour of the London. So here, it was a good entry here. However, I just took profit just here. So it was like 1:2 to 1:3 risk reward. Not bad. However, if I would have, hold it longer, would have been really a huge trade for today or profits for today. So was a lesson learned. So usually, again, if I have 2 positions, so for instance, my stop loss is here, marked with orange. I have 2 positions, and once the first position, one of the positions reaches to risk reward, then I put the stop loss to break even, and then just hold on until the last part or the US session. It would have been really a nice reward for today. Would have been a 24-hour. Imagine that. While I only took out at 2R and 3R. So I really, felt bad that it happened when this kind of things are happening. So, okay, anyway, let's dissect why did I went short to US oil. So again, so the lesson here is that we need to always follow the trade plan and do not base your decisions according to the emotions. Okay. Okay, so let's analyze first the US oil in a 4-hour time frame. Okay, I mean in the higher time frame. So basically higher time frame daily chart, that's downtrending. It keeps on breaking structure to the downside, including today. And then I go to the 4-hour time frame. So this is how US oil was moving since March 7 last week. So downtrend. So basically I am bearish with US oil. So now let's go to the lower time frame using 15 minutes. So yesterday it was also bearish from Monday, Tuesday bearish, Wednesday pullback during the Asian session. And then during the London session, I was already preparing for shorting. So let's clean this chart first para, so that we can have a clear picture, and let's just label this high and low of the previous day. We have high and low. So basically during this London session, this is one of the exception that I don't need to see that this instrument is breaking the high or low of the previous day. But so the exception is that, but if I see that if I am short, and then there is a pull in or pullback to the previous day range, and then I see the high and low of Asia. So this is the accumulation stage. The high of the Asia, and I should see that price is breaking during the London. Price is breaking above the previous Asian high in order for me to be able to do shorting. So now it broke the high of the previous session, Asia. Then I go to the 1 minute time frame. All right, so this should have been the way how it should be traded, because what I did is that I was already shorting here and here without considering the break of the Asian high. So that should be the rule. Okay, again, at the 15 minutes, we look for a pull in and the break above the Asian session high. Okay, and in confluence also, there is a in confluence with the round number. The price went to the round number. So we go to the 1 minute time frame. Back to the, so this is the erroneous entry here. So I get stop out early in the day. I was already too confident that it is a winning trade. However, I get stop out. So anyway, lesson learned again. So we always learn every day. So, okay. So we have here break above the high of the previous day. I mean, the previous Asian high. And then we have here micro break of the 1 minute structure. Okay, and then a pullback. So that's also one entry here. So I enter here, entry, and I put the 1 bar stop above the high of this swing. So that's a stop loss. Another entry is that you draw this high, the swing high and the swing low here, because here it broke this structure. So this is the last swing to the upside. And that last swing is this is where the last bullish traders came in and they were trapped. They get stopped out here. So here we pulled back inside the range of this last swing, and then we offered we have here another entry opportunity. So even if you cannot enter here and you see this engulfing, you can also enter here. So the retest of this engulfing candle. So as you can see, there are some pin bars, and then engulfing candle. So couple of entry opportunities here and then right here. All stop losses should be here. So if you measure from here to here, that's 67 points. So if I use my calculator, 67 points for USOIL, and I have a capital of about 20K, I should have a position of say 0.75 for the second position. The first position is how much? 24. So it's 24. So basically, I multiply this 0.75 times 3. That's 2.1. Yeah, 2.08. 2.08 for the first position. So right. So target. So of course, we do not know how much it will move, but theoretical target, how to measure that. So basically, we entered the round number. First target is the next round number. And that's quite a lot, actually. So my problem is that I don't have that strong discipline to hold my position until the really theoretical target. So, okay. So that's something that I have to improve still psychologically. But that's theoretical target, because if you enter here, the next target will be the next round number, or the low of this previous day, which is also significant amount of profits. So I only have took profit somewhere here at 11 a.m. So I was basing my take profit based on the time. Yeah, so I remember now that was the point, because usually after 11 a.m. the price is reversing. But if we look at the price structure, the market structure of this USOIL, it's like it doesn't really make sense that it will just target this, because even the minimum should be the previous day low. Since we are bearish, and then we just did a pullback, so this should be the minimum target. So my problem today is that I did not hold long enough my position. And if I hold it more until the Asian session, would have been really a huge profits. Anyway, lesson learned. Let's just move on and learn from those lessons. Okay, so the next one that I would like to explain is, let's say, gold. Although gold, I did not really trade today. I was waiting for gold to pull back up towards this demand zone. So how did I come up to that idea? Okay, so firstly, I have a bullish bias for gold. Okay, so how did I come up to that idea? Is that from the longer time frame or the higher time frame, you see that it's uptrending. We have a pullback, and it's a pullback towards this order block. We have here a support area. If we go to the 4 hours, it's also breaking structure to the upside. So there is no question that we are going long on this instrument. Now, I go to the 15 minutes. Since we are long, and I usually start checking opportunities during the London session. So we are long, so we want to wait for any kind of break of the previous day. So we have here Asian session. This is the accumulation phase. The manipulation phase took place during the London session. So we have a break of the structure to the downside, so quite strong. However, we have here consolidation, and that consolidation actually is a consolidation inside the range of this order block, which is a Monday range. So yeah, Monday range, we have here a break of the structure of the Monday. We have here this order block here. So if we extend that from high to low, we have this order block, and then we have this manipulation phase or stop hunt below this order block. So like what I already explained in my mentorship program, that we should not just rely on smart money concept, but we should also take into account the liquidity points. So here below this order block is actually a liquidity point. So where stop losses are lying. So those who entered here with a 1-bar stop have their stop losses below that. So that is a liquidity and prone to manipulation. So if we go to that time during this London session, and we go to the lower time frame. We have this this is the range from here to here is the order block. Okay, and then as you can see, we have here the manipulation phase. We broke out, wipe out or liquidated those stop losses in the Monday order block, and we have here an engulfing bullish candle. So if you couldn't, of course, we cannot um, see it engulfing until the candle will close. So basically, we usually cannot catch this. So what we have to do is actually a pullback, to wait for the pullback, and such that the price is not going to go lower than this order block. So you have here some bounce 1, 2, 3. The third 10, 10, 10, 10 a.m. or 10 a.m. exactly is a perfect time to enter. Then you put your stop loss not anymore here, but here. Although we have here a round number still, so you can put a little bit below that round number. So if we have a entry here, put the stop loss here, we have a 266 points risk for gold, 266. So 266, so we need 0.19 for gold. Lot size for a 20K capital. So if we have hold that position, would have been really a great trade for today, but I did not focus on that because my attention was in US oil today. So the target was the high of the previous day. So really nice. So here I did not focus too much attention here because I saw that there was a very strong break to the downside, but I did not notice that on that break is actually an opportunity to enter this order block. So again, lesson for today. So what is the key takeaway here is that we should not discount those order blocks which were formed during the past 2 or 3 days. So in this case, that was the Monday order block. Okay, so would have been a really huge trade for today, but I did not trade that. So another thing that I also missed, so I really keep on missing trades today, and I still came out negative, although the opportunities were great. So really need to practice further my strategy. So here I know that during 8 a.m. here, there are great opportunities for the index German 30 during the opening. So what I did not consider is this, the manipulation phase above the Asian high. So I know that I'm bearish German 30. So I did not consider this. Would have been I was hesitating basically. I saw this, but I was hesitating because I know that there is still a previous day high. So I wanted the price to go above this previous day high. But actually I can already risk here. So I don't need to put a lot of lot size. I'm in positions, but maybe one is enough. And if I have hold that trade long, so targeting the previous day low would have been really a huge profit also. So yeah, that's life. I missed a lot and trades nice opportunities. So I need to keep back testing my strategy. So again, till next time.